Hello, everybody. Welcome to Monday. The S&P 500 was down 0.6% today. And really, I want to try to answer a question that I think is very interesting here. Is more jobs a bad thing? In my overall view, in this case, I would say no, and I'll tell you why. But there is a reason why so many people are concerned about that and why the market has been selling off ever since we got the jobs report on Friday. So we had 517,000 jobs created in January. Expectation was for 188,000 jobs, and the market sold off on Friday. It sold off a little bit today. Nothing major, but nonetheless, some weakness coming from that. And really, when I look at the jobs report, there's some things that stick out to me that I think are very important. First of all, in the last session with Chairman Powell after the Fed funds, rate was increased by a quarter point, in that question and answer session, he talked about how although they're seeing some good results for prices dropping in the goods area, they're saying the service area is still very hot, which is exactly what I've been talking about, this pent up demand. We've got this pandemic and what have you. And in order to bring down inflation in the service area, you need more people to take these jobs. It's a simple analogy. If you have a line around the block for a restaurant and people are trying to get in there because they're dying to get out and go do things, and the restaurant can't serve as many people because they don't have enough waiters and cooks and what have you, then the restaurant could theoretically charge more for that because the demand's so high versus the supply. But if people start taking the jobs that that restaurant has listed, all of a sudden the line's not going around the block anymore, and the restaurant doesn't have that same capability theoretically to increase their prices as far as that goes. So when you create more jobs than expected, you help that situation in the service arena. And so, we saw wages do well in terms of inflationary pressure at 4.3% year over year, was lower than the month before, which is good. And then obviously, when you look at the participation rate, which was at 62.4%, which just means that 62.4% of the people that are capable of working over age 16 are back in the workforce or looking for work. And that's a really big deal. Now, it was at 63.7% prior to the pandemic, so we still have some people missing, but you're starting to make inroads into that by creating 517,000 jobs in a month. So the inflationary people are scared of this. We're seeing the bond market, where the yields are going back up again. And really because they're looking at this and saying, wow, this many jobs being created, we're going to create this very hot environment. We're going to have to pay more and more to people to make this happen. And they're quite right, except they might be missing out on this particular mixture of economic events includes a pandemic. This is not the 1970s, which is what I keep hearing quoted. And this one of the things, again, that Chairman Powell talked about at the last meeting. He says this is a unique environment. And so I think sometimes applying old metrics to the market works quite well, but we do have a very different situation here where people are willing to go out and do things because they weren't able to for quite some time. And I think more jobs here is better. So this is just my personal opinion. We'll see how this plays out. The Federal Reserve Chairman does meet again tomorrow, does a question and answer session. So it'll be very interesting to see what he has to say about this and how the market reacts to that. So we'll see how this plays out, but very, very interesting times. Interest rates are probably going to go a little bit higher than expected. Maybe we have a quarter point increase in May that wasn't expected prior to this, and that's what the market's kind of readjusting to. But I think once the market adjust to that and digest that, we could see some things continue to go well as long as earnings continue to do as well as they have been doing in the recent past here. So look forward to seeing what's going to happen tomorrow. Very interested to see what Chairman Powell has to say, and I'll give you my opinion on that too. So anyway, look forward to seeing you then. Thank you.